But the reality is all of the things I want to do vastly outweighs the capital that I have. Probably I'm, running 10 plus billion dollars, 10, 15 billion. I don't know the exact number, to be completely honest, I should. But I am risk on, and I am moving a lot of balls down the field, myself and my team.
I want to understand, Chamath, how you decide what to invest in. Do you believe, and this is a subject that's come up on your podcast, your All In podcast, do you believe in fundamentals, or as has been argued, a stock can trade wherever, regardless of whether it is or isn't hinged, to the fundamentals of the underlying business?
Well, maybe I can just give you an insight into how I process any opportunity.
Sure.
Random company comes in to the top of the funnel. Immediately, I'm making a very quick, hopefully it's a decision, but maybe sometimes it's judgment. And I'm asking myself, does this fit into my worldview or not? Meaning, is it in my circle of competence? And I have a very simple way of looking at this. Is it going to fix something in inequality that I think is important, or is it going to fix something in climate change that I think is important? Those are the only two things I care about. Inequality and climate change. Under inequality, there's a bunch of stuff. Financial equality is important. Healthcare equality is important. Education equality is important. So it allows me to organize a lot of different opportunities. And I'm trying to figure out, is there a consumer proposition here that's important for them? Does it make something more symmetric? Does it take something that was asymmetric and fix it? So that's my first judgment, which is qualitative. That's why whenever I start my one-pagers, it's always, what is the strategy? And you can read all of these one-pagers now. And what you'll get away from them is the first lens is equality and or climate change. Then I start to do the fundamental work. And this is where I have a real issue with a lot of people who say that they're value investors. I think that I'm a value investor. The thing is that when you look up the word value in the dictionary, it doesn't mean cheap. It doesn't mean a cigar butt with 2 puffs left, that famous Buffett Munger quote. I think it actually means something that has value. And so then I'm really thinking about, what are the cash flows of this business? How does it create a moat, right? Meaning in software, some technological way that's hard for people to compete with it. And then can I get it for a price where there's a margin of safety, where if they mis-execute for a quarter, or if they have a little hiccup, it's going to be okay. Because, we've got an entry point where 5 or 10 years from now, this thing will be 5 to 10 times bigger. And that's how we think about all these things. And if you look at the deals that I've done, they kind of map pretty singularly one-to-one to that framework.
So let's use a real-world example. Obviously, this is not the kind of deal you're doing, but if you look at Tesla today through that lens, is that stock a buy with a market cap north of $800 billion?
The short answer is yes. The reason is that I think look, I bought Tesla in 2014 or 15. I was one of the largest owners of the convertible debt. I felt that was the best margin of safety way to bet on Tesla. It's turned out to be an enormous winner. And I really believe in what Elon is doing. I think he's the most important entrepreneur of our lifetime. It's taken people 15 years to embrace that they're going to be now a legitimate car company. But when I underwrote the investment, my bet was on something bigger. And I think that Elon is well past putting a car company. And I think it'll take another 5 or 10 years for people to figure out what this next arc of innovation is. And what that is the deregulation of energy. If you look under the hood, utilities spend tens of billions of dollars, hundreds of billions of dollars a year all around the world on CapEx. They are completely regulated. They feel completely safe. They feel like they can issue debt ad nauseum. They can cause all kinds of damage to the environment or otherwise, look at PG&E and still come away unscathed because they're protected. Except that something is happening that nobody forecasted, which is the complete bottoms-up disruption of energy. And that's the only way that this thing is going to get deregulated. It's not going to be by law or dictate. It's not going to be, a big monolithic competitor. It's going to be because every home installs hydro panels, solar panels, batteries, and then software that basically allows them to live off the grid. And then eventually pump their excess energy into battery solutions and other things that are controlled by cities and towns and governments, who then in turn will turn off their usage of peakers at a minimum, and then over time will have very different characteristics of usage from traditional utilities. That is what Tesla is powering. That is what allows it to be a multi-trillion-dollar company. So does it have the same return profile as when I bought it at what is it equivalently now 25 or 30 bucks a share? Well, obviously not. But can it be multiples higher than where it is today? Absolutely.
One of the things Buffett did was effectively hold forever, right? Put his permanent capital to work and almost never sold. Is that you as well? Is the money that you have in, whether it's Virgin Galactic or Clover Health or Open Door or SoFi, permanent capital that you're never taking out?
Yes, but with an asterisk. Buffett became a billionaire at 58. I, because of Facebook, quite honestly, got extremely lucky in my early 30s. But this last decade has been training. And, these last few years now, I'm really on the field. I got my pads on, and I feel like I can play as good as anybody else. But the reality is all of the things I want to do vastly outweighs the capital that I have. Probably I'm, running $10+ billion, 10, 15 billion. I don't know the exact number, to be completely honest, I should. But I am risk on, and I am moving a lot of balls down the field, myself and my team. And the reality is that those things sometimes consume capital. So at the end of last year, my family office called and said, "Hey, dummy, you need to put a little bit of money here just to make sure that we have liquidity and we can keep doing all these things." And so I had to sell, a couple million shares of Virgin. I didn't want to. I haven't sold a single share of anything that I've done in the SPAC platform, in the pipes, other than those few million shares of Virgin. So if given my druthers, Eric, and if I could really just go for it, I wouldn't sell a share of anything I buy because I believe in it. But every now and then I run up into liquidity constraints like everybody else, and I get a call and they say, "Chamath, stop, slow down." And I say, "No." And then they say, "Okay, then at least give us a little buffer here so that we can continue to do all the things you want."
Is the $10 to $15 billion you're marshaling, is that money inside social capital, or is that in total? Does that include what you're doing in your family office and personal holdings that you may have in, say, Bitcoin or Tesla or Amazon or Facebook or whatever?
I know it's like the totality of everything, but it's like sloshing around in a bunch of LLC. This is the thing, social capital is more of a name, meaning, is it an entity? Yeah, technically there's a company with the name Social Capital on it, but everything is flowed through a Byzantine bunch of LLCs and this and that I personally own. This is why, part of the work now that I have to do this year is reorganize this. So, Social Capital 1.0 was a traditional set of venture funds called Social Capital. Social Capital 2.0 is basically my family office. And for Social Capital 3.0 to become a reality, which I would like to do in the next couple of years, I have to do some cleanup work. And again, this is sort of like, when the music's on, you have to be dancing. And so I haven't had time to do that because, I see opportunities and I want to seize them and I want to invest, thinking that I'll just come back and clean up whatever organizational mess is created after.